People are accustomed to think of central banks as institutions that contribute to economic stability, that help to save them from crises, that make the economy more reliable and safe than it would be otherwise. But the actual truth is that central banks are fundamentally destabilizing institutions. If one goes back and looks at the history of central banks, going back to, say, the founding of the Bank of England in 1694, what one finds is that these institutions originated in government's quest for revenue. They wanted financial institutions that would assist them with loans and other favors. They weren't concerned about economic stability when they created the first central banks. Those institutions, however, those early central banks, and the Bank of England in particular, came eventually to be seen as bulwarks of economic stability. And this was a big misunderstanding. Actually, what happened was that the very presence of the central banks and the powers and privileges they commanded allowed them to be a source of tremendous instability. And at a certain point, it became clear that unless the central banks conducted their affairs in a manner that took account of the potential harm they were capable of doing, that industrial societies would continue to be exposed to serious crises. Well, this notion that there are better or worse ways for central banks to behave ultimately was misunderstood as implying that well-behaved central banks were actually desirable institutions. So the Bank of England learned over time to become a lender of last resort during crises. But it would have been better if England had never had a central bank to begin with, because it wouldn't have had such serious crises. We can compare the performance of England with the Bank of England in the 19th century with the situation in Scotland, where there was no central bank during most of that century. And the result was that the Scottish system was much more stable than the English system. Yes, England had a central bank which could act as a lender of last resort, but it also had a central bank that could be a cause of boom-bust cycles, and that therefore had to act as a lender of last resort if a crisis was going to be avoided. So, all things considered, we really would have been better off if we'd never created these monopoly institutions in the first place. We'd have had more stable monetary systems if we'd done that.